Yeah, welcome everybody to a panel on CBDCs, outlook, challenges and opportunities. And I would like to introduce 5 speakers or 5 panelists here. Let me start just there with Wolfram Seidemann. He's CEO of G&D Currency Technology, part of the G&D Group, global leader in security tech. Been engaged in the discussions on CBDCs from the very beginning. I was told deeply involved with central banks globally, as well as institutions such as the IMF and the World Bank. In recent years, G&D has successfully led numerous pilot projects, primarily in retail CBDCs, across Africa, Asia, and Latin America. We've seen that in John's lecture, that G&D was the main partner in Ghana, for example. So next there is Julien Donnet, head of product of SDX, the digital exchange of Swiss exchange SAX. Julien spent more than a decade in consulting and product management in the financial industry. He regards himself, so I was told, as a curious engineer who likes to try out apps and products. In his free time, he is running his own blockchain nodes, and he's also a guest lecturer of École Polytechnique Fédérale de Lausanne. Yeah. Julien used to work for Deloitte until the end of 2019, which brings me directly to our next panelist, who is Jens Hermann Paulsen, who is not only still working for Deloitte, but is its director of the Deloitte Blockchain Institute. He was one of its founders, and so he's an expert in DLT, crypto assets. Well, we're lucky because we had the crypto assets conference, in tokenization, and of course, CBDCs. Yeah. He also leads the Deloitte Talent Group, the institute's an incubation that is all about topics like AI, quantum computing, and neuroscience. Next one is John Kiff. You already heard his lecture. FinTech and digital currency expert from Virginia in the US of A. After 25 years with the Bank of Canada and another 16 with the IMF, John obviously thought enough is enough, and founded Kiffmeister, his own digital currency advisory, which did not keep him from spending some time as head of CBDC at Satoshi Capital Advisors or at the CBDC think tank in New York. Last but not least is Ulrich Bindseil, you just heard, and had the pleasure to listen to. He's an economist that I can relate to, and is already working for 25 years, because I'm an economist also, no? He's already working for 25 years for the European Central Bank, currently is Director General Market Infrastructure and Payments. Thus, he's obviously a natural when it comes to CBDCs, which you may have just found out yourself. So, without further ado, after a round of introductions, let's delve into the topic at hand. Lots of points have been made already, and we like to explore them further, because if I start out with new topics, we would leave out all the interesting and major questions. So maybe some of those points sound interesting, sound familiar to you, but nonetheless, let me first begin. We're here at the Crypto Assets Conference, talking about how digitalization is shaping the world of assets and money. Of course, ideas are flying high everywhere, because there are lots of possibilities of what you can or might do with digital money, or more specific, also central bank money. For example, we might program it, yeah, and either to grow, or we might, the other way around, we could finally introduce the idea of Silvio Gesel's idea of Schwundgeld, economy-wide by making it self-liquidating. We could do all that, or we could have an exchange rate on private money. Now, if that wouldn't be monetary policy, be made easy. But mainly, and this I took from John's lecture also, this is not really to be seen. So why is that? Why are CBs around the globe not making use of it and not pushing ahead of that? Because it would make the job so much easier. And I would like to give John and Ulrich a little more rest because of the lectures, and I would like to start out with you, Jens Hermann Paulsen.
Sure. I mean, you two are the experts there when I talk about the mandate of a central bank, but I think it's a question about the mandate. Where does it start and where does it end? That's one part of it. And then where do governments play a role in this? And then also, and we have seen that in your lecture just about the digital euro, first and foremost, it's about to build a system that is secure, inclusive, and scalable. This is from my point of view, the initial steps. And then it's also for a lot of people, it's scary for some people. If we start out with those value propositions without even having built out a scalable, secure, inclusive system, then we're doing the second step before we do the first one that can prove that there is a good use case for it and a need for it in the market. That would be my opinion on it.
So would the others agree? It's this is programmable money is the second step, and we see that sometimes in the future, or is that not in the cards for central banks? Do they have other interests? What's that? Julien.
Well, to be used, it needs to be built first. And currently in the world, there's just a handful of countries which have either a pilot or a productive CBDC. And there is a reason for that. It's bloody difficult. It takes a very long time to bring to the table all the different stakeholders that need to agree on how it's governed and how it works. Which technology to be used? Should it be DLT? Should it be a retail, a wholesale? All of this takes time to be decided. We in Switzerland, we have one of the most mature ecosystems in terms of CBDCs. We have a pilot wholesale Swiss franc, which is used today on our platform to settle transactions. But it took us roughly 6 years to get there. The first 2 years, it was about setting the legal framework around it and proving that the workflows work, that we can issue a digital Swiss franc, that you can use it for the settlement of transactions. Then it was about building all the monitoring tools for the Swiss National Bank that they can feel comfortable using it, interfacing it with legacy systems through ISO messages, because if you're a bank, if you are a central bank, you would like to be able to interact with your wholesale CBDC using what you know, so ISO messages usually. And then it is about bringing it to production, which is a gigantic step, because then you are not anymore on test environments, you are reaching production, where your wholesale CBDC is exactly the same as sight deposits. And this is a very big leap. Now we are entering, after these 6 years, a new phase for the pilot where we actually try to find what else. You reach the status quo, you can do pretty much what you do with your regular rails with a digital Swiss franc, but now it's also up to the private sector to come up with new innovative ideas on how to use this digital Swiss franc in new ways.
Okay, thank you. And I would encourage all of our panelists just to cut in when they have something, feel they have something to say. So we're not doing this like in school, raise your hand and I give you the word. Wolfram, you have some experience, like for example in Ghana. What was your experience? What was on the mind of central bankers there? Programmable stuff, was that even an issue? Or?
Yeah, well, mainly there were two objectives. One is to drive the digital economy and generate growth. And two was to ensure financial inclusion. And especially in Ghana, we did actually 2 pilots, which was interesting because one was in the city where a lot of digitalization is already in place, a lot of infrastructure is there, a lot of apps are there who struggled to find the payment lag. So they had to, new products and services had to rely on card rails, for example, which takes time to settle and is costly for the fintech to run it. So they were happy to have a settlement instrument which was provided by the central bank to drive their products and solutions. And the pilot in the rural environment was the complete opposite, where financial inclusion is not guaranteed because there's even not a network of bank branches. So a lot of unbanked people who would then have an opportunity to be onboarded and have access to digital services. And both were really successful. In the urban environment, within 2 weeks, one can integrate into a commercial bank or fintech and make use of the subscribers they already have. So there's just a function, a feature being added. Do you want to transact with the e-Seidi in that case, or digital currency? And the other interesting experience in the rural environment was, and that was actually striking because we thought first that digital currency is a means of payment, and that's also how it's designed in the Eurozone, for example. But after a few days, people came back with a bundle of cash and asked the teller to convert them into digital currency on the card because they thought it's more protective because it was protected by a PIN. And so we have to remind ourselves that money has also a store of value functionality. And that is the case with CBDC as well.
Yeah, John, come on.
I'd like to go back to my last slides in my presentation, and we kind of flipped the script in that way because, in fact, you jump right into it because you're basically designing around very small scale, niche applications. And I go back to the Hungarian central bank experiment with this student safe, they called it, which was designed for students to learn more about banking and saving money, and this thing was festooned with programmability, smart contracts, the kind of things that would blow your mind if we were talking about the Death Star CBDC that's used for everybody. So there was no hand wringing about disintermediation. Oh my God, what could go wrong, and so on. Because in fact, what we've sometimes called is the test and deploy project management. So it jumps past the 5 Ps of the IMF and says, let's just do it. And if something goes wrong, it's not a big deal because you're not designing something that's going to blow up the whole monetary system. There might be glitches which might irritate the pilot users, but start small and then go in reverse essentially. Maybe you have a parallel effort where you are exploring the Death Star implications of rolling out a big time CBDC, but you could still be experimenting with the programmability and so on.
If you allow saying something briefly on remuneration and on programmability. First, remuneration. The first paper on CBDC was in 2016, I believe, by Bank of England economists, academic sort of economists, so maybe not like us, we are practical economists, but that was a paper, which was full of formulas and that showed that if you introduce CBDC with remuneration and use it as a monetary policy instrument, I don't know, GDP will increase by 3% or something. And I would say no. I mean, I'm not convinced by this type of, idea. I think monetary policy is essentially reduced to one interest rate, and you cannot, add instruments and say we will introduce CBDC and do wild things with it. And our macroeconomic model shows that we can, smoothen economic cycles and increase GDP by 3% in steady state. So, but that was a starting point. And even, the applied central bankers were, I think, quite allergic against that. And that explains why central banks in around 2017 were quite negative on CBDC. I mean, they viewed it a bit as a wild idea of academic monetary economists, including this idea of using it as such a tool. Then, of course, I mean, me as an economist, I also have a view on remuneration, which is not so negative, but a very different one from those guys. I would say, banknotes, it's very strange that in a world where you have lots of, I think the battery, I don't know, I have to get closer and closer. Yeah. So in a world where all the instruments are remunerated and paper is not remunerated, paper money, because of technology, that creates very strange, non-neutral effects that cash, regardless of whether the nominal interest rate in the market is 10% or 0%, cash is always at 0%. That creates non-neutral macroeconomic effects, no? And if you would remunerate CBDC in a way to make it neutral, yeah, so you would not say, now this is a policy instrument and I use it as a policy variable, but you move it in a neutral way together with central bank rates, then you overcome this non-neutrality, no? And that's completely opposite. It's also an economic perspective. That would be my perspective. But reality is then that, as John explained, everywhere central banks gave up the idea of remuneration because of strong emotions against that from 2 or even 3 types of people, very different people. First, lawyers. For lawyers, money is not remunerated. And you know, as an economist, if you say that's an anomaly because it's paper and was not possible, they just don't understand. Second category are banks who don't like the idea of positive remuneration because they see it then as a more aggressive competition to their deposits. And the third category is a bit, I would say, libertarian, maybe right-wing type of critique of CBDC, who would say, yeah, you want to be able to implement negative interest rates, no? And you want to, you know, the financial repression thing, you want to boost with CBDC and you want to get rid of banknotes. That's your true motivation. So these 3 types of parties have, you know, an unholy alliance then. So the discussion on remunerated CBDC stopped very quickly, and it was just, you know, the narrative became, this is digital cash, it's like cash, don't get excited. And on programmability, central banks, you know, never promoted programmability in the sense of, you know, some people can no longer buy cigarettes with central bank money. This was also, I would say, an invented narrative by libertarians who were looking for also fake arguments against the CBDC. So they said, that's what the central banks want to do. Oh my God, don't accept this, you know, fight against CBDC. But that was something never a central banker had in mind anyway.
Yeah. And anyway, central banks are a lot about preservation of things, and so why have extra issues if you don't need them? Sorry? Why have, yeah, I mean, central banks are about to preserve the value of money, yeah, and so this is a very conservative approach. So maybe having all kind of, like you said, wild things you can do with is maybe not the approach a central bank has towards money.
Can I add something there? Because we need to think about the CBDC ecosystem. The central bank is just the issuer of an instrument, but you can do with it a lot. You can use it in programmable payments. You can use it in purpose-bound wallets. Because it's a digital instrument that can be used in innovative products and services. And that's why it's called a platform for innovation. And it's about the collaboration between the central banks and the commercial sector to come up with new ideas on how to make use of that.
Absolutely. So that's why, you know, you want to move into the electronic age also with central bank money, because it allows, electronic money allows for that. And of course, we would see, you know, programmable payments as being in scope in the same way as open banking is supposed to allow for programmed payments in commercial bank money. That should also be in scope of CBDC.
So in the end, if we're sticking to the idea of digital cash, fairly simple it sounds, well, we will see if that is really so simple. The first thing that comes to my mind is everyone's using money, but hardly anybody understands what it is or even cares as long as it works. And let's face facts, as long as we are looking at the Eurozone, there's lots of talk how bad the Euro is and how bad the banks are, but the whole thing works. So just yesterday I had a discussion after a table tennis match, and thing was what they didn't understand was why have a digital cash at all, or what's the difference to e-money? And I have a result of a recent survey here in 9 European countries. 40% had never even heard of a CBDC. More than 1/3 said they do not intend to use it, probably for the very same reason, because they wouldn't know what it is. So why would, from an everyday user perspective, why would you use digital central bank money instead of your usual Visa or MasterCard or whatever you have? Why would you drop your credit cards and use a central bank wallet?
And I would say, and this shouldn't be a critique, but that's a burden that's currently dropped upon the banks that are actually then, so the banking sector, in the end, building upon this innovation platform to build solutions that are really putting a big use to it that is beyond the systematic use or need that we have here. So this is also why, from my perspective, it's good to see that the fundamental, we don't want that acting in the market is easing up. So we see banks looking into that. We see them, well, there might be a differentiated view out there, but there are banks looking into that to really build upon it. And that's something that is good, because otherwise we will not see a good use for it. At the same time, I think we are looking into one of the biggest marketing projects of Europe in the next years. And that while I admire what you present today, this is not what we can put out in the market for the general public in order to give them an understanding on why this is relevant for them. And it's even harder if you look. Imagine you have two bank balances, and people haven't yet understood that it's not backed by gold. I mean, that is where we're coming from. So then you have two balances, and how do we explain those? This is slightly not so secure money and secure money, I mean, which is then also threatening the positioning of the banks, and only showing one balance and saying that the bottom 300 or 3,000 or whatever number of that is always central bank money is an issue for the model of the banks. So there is a lot to do here on putting that out in the market and that needs to be done by banks and central banks and national banks together in order to make this successful. So there is a lot to do in that segment.
And maybe to come back for the usability part and why, as a user, you would like to use this form of cash, and taking the assumption that this digital euro is exactly the same as a banknote or coins. So first you can exchange it digitally, so you don't have to meet. So from an efficiency perspective, it's very interesting. But also you can use it everywhere. As it is legal tender, you are supposed to be able to pay with it, whether you are in a restaurant, whether you are in a hotel, or whatever it is. Today, if you go somewhere, sometimes, you know, the post office in Switzerland, they only accept debit cards, for instance. You can only use debit cards. So with this form of money, you should be able to use it for absolutely everything in the country where you are living. Then it would be also about the risk. If you use Visa, MasterCard, if you use a bank, you are also exposing yourself to potential defaults or potential fraud and so on and so forth. But me, I'm coming more from a wholesale perspective, and as such, in that regards, it's undeniable today that we have a growth in terms of tokenization in the DLT world, whether it is on public blockchains, on private blockchains. There are plenty of different islands where tokenization happens. So the creation and the issuance of assets on this platform is basically achieved. You can do it. Now, what the institutional players are really looking forward to would be probably a reliable, riskless payment leg. And as such, today they can use either tokenized bank deposits, but then as a bank, do you want to use the tokenized bank deposit of another bank as a payment leg? I don't think so. You can use stable coins, arguably difficult as a financial institution and as a bank. So in their quest for the perfect mean of payment, the perfect cash leg to settle transactions involving tokenization, they are looking for a wholesale central bank digital currency for sure.
Yeah, Wolfram, you just picked up your mic, so
yeah.
I would give you, but then comes John.
I'd like to come back to your question, would I give up my credit card? And I wouldn't, because the credit card comes with additional features. It offers credit. But CBDC can come also with two superior features which are not existing at any other digital instrument as of today. One is it can be used independently of the issuer. Once it's issued, it can be universally used by everyone with any device. So you don't need to have a complex smartphone. You can use it on a card as well. You don't need to have a contract with a service provider. Yeah? You can just use it. And the second feature is it also works offline, which is super cool. If we design it as a token-based solution, you can actually work in an unconnected environment. And no other digital payment solution can offer that at the moment. So that's why I think it's really cool.
John.
Okay, well, a couple of things. Yeah, first of all, I think the offline access is a killer app. Although the Riksbank is actually taking a whole different tack now. They've kind of shut down their CBDC project, but they're very keen on offline access, so they're pushing the banks to them, and they'll work with the banks to enable them to offer offline versions of their payment media. The other thing I was going to talk about too was we talked about marketing. You mentioned these surveys where people don't even know what a CBDC is. I think there's a shortfall there. I think in the case of the Central Bank of the Bahamas, they've admitted that their sand dollar failure is partially their fault for not really getting out there, pounding the pavement, and letting people know what's special about their sand dollar. And I think if you're going to talk like a really aggressive marketer, some of the things I would focus on would be that you're not aware of this, but when you're using your credit cards and so on, you're paying these fees, right? The merchants are paying fees, and they're very high for small vendors. I mean, I worked for this is a long time ago, it's probably the same. I worked for a little souvenir stand, and the volumes are really low. We're selling the little trinkets, but the credit card companies were gouging us with fees. And most people aren't aware of that. These are all baked into the prices. So if someone walks into my store and pays me in cash or credit card, they pay the same either way, so they're not even aware of that. So I would be pushing that in the marketing, that for merchants especially, and some of these underwhelming efforts, that has been the problem. The merchants aren't buying into this. If you can get the merchants to buy into it, so when someone walks into the store, they say, here, you can buy it for this much with a credit card, or you can use this CBDC payment medium, and you'll pay a lot less. Also, I think, and this is kind of relevant, I think, to the ECB efforts. I mean, I'm impressed with the commitment that the ECB has to making these things as private as they possibly can be. So I think if you can design and roll out a CBDC that even has a small incremental amount more privacy than you get with the other payment media, that's something that should also be really pounded through.
Yeah. Ulrich, come.
Yeah, briefly. So arguments, again, for using the arguments like the monetary anchor and so on, it's too abstract. It's not a selling point for the individual, to decide what to pay with. So what are the arguments? Legal tender, that you can use it everywhere is of course a privilege of public money, but that is one foundation of reaching the network effects. Second, we don't design it as a closed loop solution. It's not us central bankers who now, want to compete with the private payment service providers who have been in the business for decades. That's why our approach taken is to rely on the industry, to not, have a closed loop solution which we design, but digital euro will be distributed by the industry. And the magic is, that we will have a rule book, which, like the rule book of any payment scheme, will impose rules, and those rules will incorporate the policy objectives, like interoperability and the standards, the QR standard that you will use, and at the same time preserve an open, competitive, industry-based, ecosystem around digital euro. So we should reach the same convenience in usage as the private solutions. And then, combined with the network effects we can reach, also thanks to the privilege of legal tender, we should have an offer which merchants like, because it is priced attractively for merchants. No, our idea is that the merchant fee will will compensate the banks and the other institutions who provide the wallets, who provide services to digital euro users. We will not have an end-client relationship. It will be done by the industry. It will be financed by the merchant fee, but we have to make that efficient. We have to benefit from scale effects, and we will not abuse our market power. That's also our privilege as public player, so that the merchants must like us. And if the merchants like us, they will, put digital euro in the forefront. They will say, use digital euro, and only if the client says, I don't have a wallet, I'm a tourist, I have only MasterCard, okay, then the merchant will say, also fine. But the merchant has a lot of leeway, and if digital euro is attractive for the merchant will also push it.
So if we now have the merchant happy, and we do have the people happy because they might pay less or get loyalty points or whatever they get in the supermarket, the open question for me remains is how do we get the banks happy in order to build a solution that is used or visible and not hidden in the 20th view of the online app or the whatever app you're using then. And that is for me the need to embrace that they are actually losing the customer endpoint more and more to Apple and big tech. So this is actually an opportunity to gain that control back of the customer if they build it rightly.
And exactly. So the banks should be compensated for their efforts. I mean, in the same way they are compensated for issuing a card, they get the interchange fee, and then, of course, both the card issuer and then wallet providers like Apple Pay have market power. So the banks, are exposed to this market power, and the banks at the end may like, us because we don't abuse market power, neither towards, the merchants nor towards the bank. And with our scale and hopefully an efficient design, we can, have a nice share of the cake for everyone. But okay, we have to deliver on that, of course.
So, before we continue any further, I would like you and the audience, if you have any questions for the panel, we might discuss.
I find it a very interesting discussion. So my question really is twofold. In a long-term perspective, like when scale effect and network effects really play out, and if you maybe even deliver a better product than Visa and MasterCard, what's the long-term perspective? Like 20 years, do you see 100% market share? Everyone in Europe uses CBDCs. It's better, it's more efficient, it's cheaper, it's safer. Could that be, is that? And the second question is, when do we get it? How long do we have to wait to finally use it?
So it's probably for you, Ulrich.
Yeah, very briefly. So I think we want coexistence of private solutions and public solutions. And although we take this open approach, industry innovation should be part of digital euro, we think that there will always be private, initiative which can be faster and more creative outside our rule book. So, it's very difficult. It's a very dynamic market, payments those days. So it's difficult to predict what comes in 20 years. But I would say coexistence because we will be less innovative and fast, and we are a central bank still. Sorry, your second question was?
When do we get it? How long do we have to
Okay, yeah. So we now wait for the co-legislation to progress. No, so we work on it, but at the same time, the decision to issue comes only when the co-legislator has concluded. And the co-legislation was a bit slowed down by the parliamentary elections, the reconstitution of the commission, and we assume now work resumes so that we will have the co-legislation at some stage. Then the governing council can decide we do it, and then the implementation phase can start. And it's not only for us to implement, but the whole industry has to implement. There has to be a lot of testing, and realistically, it takes 2 or 3 years once you know it for sure to implement it before you launch it. Yeah.
And on the adoption part, and you said that before, it's not going to be 100% adoption rate because credit, CBDC is debit. Debit cards might have a hard time though, but the credit card, the very real one, that's going to be a big differentiator between those means of pay.
Or coins. Actually, my vision goes a little bit further than that. I believe that CBDC can be the platform that allows a lot of new products and services to be developed. So today, when someone creates a new creative payment service, you have to develop both. You have to develop the payment product, but you also have to develop the back end and invest in the infrastructure. I believe that we will have more competition in the future about new products and services, but they can all use the same infrastructure and therefore are interoperable, and that's what the network effect can create, and therefore more efficient.
The challenge then is to have also a central bank which is not risk averse and that also enables the private sector to actually craft new use cases, because this is for sure a challenge.
But the use case is developed not by the central bank.
Yeah, but they provide the CBDC, so they should also provide the rails in which way this CBDC can be used actually in the apps.
John, when we're talking about where are we with the CBDC in 20 years, I would like your global approach. Will we have them everywhere? Will we have them nowhere? Or something in between, I'd guess.
Well, I like a lot what Wolfram just said. That I think what we should be trying to build is a platform for innovation. And when I think about programmability, for instance, I think Ulrich mentioned this, or he kind of alluded to this distinction between programmable money and programmable payments. And so, you know, I don't think any central bank really wants to get into the business of programmable money, but they're fine with the idea of programmable payments. So you need to deliver something that enables creative people, fintechs, and so on, to be able to build stuff with this platform. That's what I see. And in that case, it could be that central bank digital currency is, you know, 100% in use in a way as the base layer for all this innovation, possibly. That's my view.
And would you have an educated guess in how large the scope worldwide might be? No. Okay. Then we don't. Any further questions from the audience? Yeah, up there. Please wait till you get the mic.
My question is, first of all, to Mr. Seidemann. You said that, to Mr. Bindseil. You said that the ECB would probably support the banks in implementing CBDCs. What do you think the support would look like? And question to everyone else, what do you think the support should look like? Thank you.
Is that the support from the banks to the digital euro or the other way around? I mean, I was not sure.
I think Jens said before that the question was how banks would make CBDCs look attractive.
Yeah, okay.
And you said that you would support, or at least that was my take.
Yeah, I think there are two elements again. I mean, banks have to also like digital euro at the end in practice because they earn compensation and they preserve the client relation via CBDC. So, and they don't get abused at the end by a super powerful private player dominating everything. So, I mean, on top digital euro, that's a discussion, but the plan is to have a digital euro, so to have two options in terms of how digital euro wallets are provided. Banks can provide it within their banking app, or an independent digital euro app could be used by each of you. So if your bank really is offering it in a very unattractive manner, and you like digital euro, you can also download the separate digital euro app, and the bank has to support it then in terms of flows from commercial bank money. So that puts on top a certain pressure on banks to offer it within their own banking apps in a not too unattractive way, because if the client then goes to a separate digital euro app, it's a bit more remote than to the control of the bank. So that's an extra, let's say.
Jens, I think the question was partly at least posed to you, so would you like, or has Ulrich already said everything?
And I was just smiling a little because you need now to build an app which is good but not too good, right? in some sense. I think that is a means of support, but I mean, you haven't mentioned it yet, no, but you're also having those focus groups and working groups together with the banks. It's not that you're building it in isolation, and I think that is the support that is also needed to be heard there. It's also important to make yourself heard. So it's a two-sided street, but I think that is a very important part of the process.
Any other question? No, then I have still one. It's just on the topic of acceptance. I mean, for a digital cash to succeed, we need people to use it. Now, to return to the survey I mentioned earlier and to return to the table tennis match yesterday also, because there was also a certain mistrust voiced. And that survey said from January that 40% would entrust the data to the principal bank, 30% to nobody, and only 20% to the central bank. And we see that public institutions, the trust in public institutions is quite low. I mean, the central bank still fares a little better than governments. But yeah, how do you deal with that issue? Is that an issue for you at all? What do you think? John, yeah, please.
Well, most central banks that I talk to and observe, I mean, they don't want that data. They don't want anything to do with it. And that's why they like the two-tier model I mentioned earlier, where the intermediaries do all that, the functions of monitoring for illicit finance and so on, which are the reasons why they do need to collect some data. But central banks don't want to see that. And if they do see it, they want it encrypted in some way that all they can see is patterns. In the early days of experimentation, when Uruguay did their pilot, they set it up so that the central bank could just see this anonymized data, and if they saw interest in patterns, then they, with a court order, they have to prove that there's something really fishy about this. They could potentially either unlock the anonymization, or they can go to the bank that's running that particular payment wallet and say, we need you to focus on this issue. But central banks don't want the data, because with great power comes great responsibility, as Spider-Man said. Again, that's the movie, my movie.
You love movies, don't you? Wolfram.
Oh, I just wanted to add, technically, this can be simply done by separating the data that is personal data from data that is needed to verify the authenticity of the digital currency or to verify a transaction. And that can be completely separated.
And you said it before, it's aggressive marketing, right? We cannot see it and we don't want to see it. And this is going to be rephrased a lot of times, I think.
Just to add, I mean, John said it very well. I mean, we are of course not interested by the data. And then now in the case of digital euro, you know, the offline payments will be even more almost anonymous than online, and there will be a limit then to the size of payments you can make. And we as central bank have the luxury to not be responsible for choosing, you know, the maximum value of such close to anonymous payments. That's for the co-legislator to do. It's not our business as central bank to decide on this very tricky trade-off between, you know, privacy and preventing illicit payments. That's only the co-legislator can do that, and we are happy about that. And then, of course, you know, there are some people who say, yeah, but if you one day, if you have CBDC, and then you can see how quickly a democracy can become, you know, something different, and then it will be exploited. But that's not very convincing. No, all the electronic means of payments can be easily controlled by a state authority. Why do you need a CBDC for that? We as central bank will not have the identities of people. And you know, if let's say you are using a private means of payment, let's say you have a Visa card and you are on the Interpol list and you are someone police is looking for, I mean, the moment you pay in Hong Kong, people will see it. No, authorities will see it and will catch you. So it's, you know, really nothing to do with CBDC that makes it more transparent than private payments. And the day, you know, we collapse, our democracy collapses, it makes no difference if people all pay with cards or they all pay with CBDC.
Thank you very much, and thank you very much, everyone, for your voiced opinions and for taking part in this panel. And before I conclude, I would have another question from me to the audience. I give you three possibilities. Number one is, who of you is looking forward to the CBDC and would like to see it tomorrow? Who says, well, that's a possibility, and the third possibility would be never. So let me start with the first one. Who of you is looking forward? Please raise your hands. Okay, that's at least some. So, and who thinks that's a definite possibility? Oh, that's more. And who of you says never? Oh, yeah, still some. Well, thank you so much for attending. I hope you had a good time.